We really appreciate you giving such a wonderful introduction to our final panel of this forum. New products and new industry, protecting consumers and closing coverage gaps will be moderated by Andy Mais, NAIC President and Connecticut Insurance Commissioner. Our panelists are going to include Dr. Guillermo Pedro Plate, who is the Superintendent of the SSN in Argentina. He tried very unsuccessfully to explain to me the pronunciation of his agency last night. It just wasn't going to take. Adam Rimmer, the CEO and co-founder of FloodFlash, as well as Peter Windsor, who is the senior financial sector expert of the IMF. Sir?
Thank you, Director. And good, it's still morning, so good morning, everyone. And this is our last panel. So please join me in thanking the speakers, the moderators, and the panelists so far who have given us so much to consider. I'm really pleased to be moderating the last panel. It's been quite a day and a half, and it is a measure of the importance that we place on the issue that this panel will focus on innovation and protection gaps. Protection gaps, as we all know, are growing, and we've heard that over the past day and a half so many times. But due to innovation and technology, we have the means to start chipping away at that. What I'm going to ask, by the way, is I'm going to ask if we can put up the Slido question while I do this introduction so the audience can begin to respond to that first question. Because what I would love to have is to have our panelists give their view on the audience reaction. So if we could do the Slido question, that'd be wonderful. We could have that pop up on the screen. Innovation covers a variety of sense. And we take a look at some of the products. For instance, we heard in the last speech, we heard about microinsurance. And microinsurance has made such a huge difference in so many markets, and it is now being considered by established insurers in our own market. And I have to tell you, I'm thrilled by that. There's parametric insurance. It's an interesting product. There are concerns by some, but I also think it offers opportunities to be able to address some of the gaps that we see, to be able to reduce the concerns of some of our consumers. We need to innovate. Cyber insurance is a particularly easy topic because that was an afterthought just a few years ago. And now it's probably one of the fastest growing lines of insurance that we can find. So the question then becomes, with so much new material and so many different ways of doing business, how can we ensure that both consumers and regulators stay abreast of the latest trends, the latest developments, the latest option? And that's a topic that's front and center in almost every conference, every forum, every roundtable, because it is evolving. And as thought leaders, as we are in this room, we need to drive this conversation forward. We need to ensure that we are protecting consumers and ensuring the resilience of communities. And Dr. Plate is on the other end here from Argentina. As a side note, I was down in Uruguay just last week for the Latin American Supervisors, that's the ASAL conference. That was a big topic of discussion then. And at that conference, the discussion was certainly enlightening. I'm hoping that you will find it enlightening here too. So with that introduction, I'm just so pleased to introduce our three panelists that I have here. And I'm looking at the result of the poll, and the question is, what is the protection gap that needs the most attention? Not sure if there are if there's anyone who would still like to add. You still have time to add your responses. But as we look here, we can see between property, general coverage, and financial security, the retirement gap, the audience seems to think that those are the top two gaps that need to be addressed. I'm going to ask each of you in turn. I'm going to start with you, Peter. Sorry to put you on the spot, but you're closest to me. What do you think? What do you think of the audience reaction? Is it correct? How do you see it?
I think it's absolutely right. You'll have to excuse my voice. I'm balancing this panel. You've got the best voice in insurance supervision, so I'll balance that today. So I think it's interesting that the retirement gap issue is gaining prominence. Mostly when we talk about protection gap, we're talking about natural catastrophe. But now I see the retirement gap issue becoming more prominent, and this reflects that.
And we remember that GFIA study that was out a couple years ago that said how huge that gap is and how difficult it is to fill. Let me turn to Adam. You're the CEO, the co-founder of FloodFlash. What do you think?
Yeah, I think I agree. The numbers look right to me. I think with the two that are running ahead there. I mean, from my personal point of view, like I spend much more time thinking about the property gap. That is insuring events that, unlike auto insurance or general homeowners insurance, like these events are rare. You have in the grand scheme of things, like you have a very small sample size from history, and it's very difficult for insurers to price these risks. Therefore, coverage becomes expensive. People decide to forego it, often because these risks are rare as well. They don't want to, don't have the same appetite to part with their cash to buy that cover. Of those top two, I think the other reason that property is particularly interesting to consider is that more than sort of the retirement gap for individuals, it is about acute events, like short, sharp events that cause a massive financial shock to that individual, which are often unforeseen. And to me, like that is like the real purpose of like insurance, as I think about it.
The short, sharp shock. I knew I'd get that right sooner or later. But let me turn to Guillermo. Yeah. What do you think? What's been your experience in Argentina?
Well, first of all, thank you so much for inviting me. I remember being here this same event in 2019. So always it's a good place to be, and I always receive the support and receive a lot of support from the NAIC. Just one thing. Last night, I told Eric that if he could say Superintendencia de Seguros de la Nación, I would say something smart and something important, but he couldn't, yeah. So I tried to do my best still. Our main gap is, in terms of protection gap, of course, is agriculture insurance and retirement gap. Those are the biggest issues in Argentina. But I would like to say something also maybe a little bit outside the box here, because I'm seeing that we always talk about consumer, and I don't allow anyone in the Superintendencia to talk about consumer. I think that we don't have consumers, we have insured people or insured to be people. And this is because of what we were discussing yesterday about social inflation and about litigation abuse. I can't allow consumer laws to get into the insurance framework and the insurance sector. If we do our job well as regulators, and in terms of, for instance, market conduct, then we should avoid interference and overlaps of those laws and principles. And in terms of protection gap, also, for me, protection gap is not only the risk that we need to cover, but also closing the gap between poverty and decent life. And this has to do with investments from insurance companies going to productive finance, going to capital markets to provide jobs and to provide infrastructure and job creation. So when I think about protection gap, I'm sorry I'm being long in my answer, I think about these two things, right? On the one hand, risk that needs to be covered. On the other hand, investments of the insurance companies that, of course, they need to comply with the principles of liquidity, profitability, and warranty, but definitely they need to go to the market, capital markets, and productivity.
Provide opportunity in a sense, you would say. Let me turn to you, Peter. You're at the IMF. Your focus is the world. What do you see in terms of regional differences as we look at, or do you see regional differences as we look at the protection gap? And if you see them, what, where, and why?
So the issue, I think, is most acute for small island nations. The IMF has a surveillance mandate, and we have an annual surveillance engagement with countries, with all 190 members. They're called Article 4 missions, and I had a mission chief come back from an Article 4 mission recently to the Caribbean, and he reached out to me and he said they're actually seeing a substantial rise in the cost of insurance driven by the cost and availability of reinsurance. And this is then leading to spillover effects on the banks, where they have properties that are security for loans, and where the mortgagees either cannot actually obtain insurance or cannot afford the level of coverage that's offered. So, and of course, these countries are not as well resourced as a country like the US. They don't have insurers of last resort like you have in many states in the US. So this is quite an acute problem for them. But it isn't just only the small island nations. I think in many emerging and developing economies, which already have significant protection gaps, things are getting worse, and mainly due to the cost and availability of reinsurance. And many of the countries that are most negatively exposed to climate risks are those that are least equipped to actually deal with it in terms of being able to have the infrastructure to mitigate the risks and having an insurance market that would be sophisticated enough to deal with those risks. So you compare that then with geographically diverse and economically diverse advanced countries like the United States and like Australia, where I'm from. They're in a much better position to deal with what are typically regional problems. So I'll give you an example from Australia. There's a reinsurance pool that's been set up there, established for catastrophe risk in North Queensland, where risks from cyclones are making insurance unaffordable for many. And the government has implemented a reinsurance pool for insurance companies to transfer their risk for cyclones and cyclone-related flood damage. And that's called the Cyclone Reinsurance Pool. And interestingly, it's actually run by the same organisation that runs the terrorism pool. So another thing I think that we do see is that there's a lack of risk awareness, and also there's an expectation of either government or NGOs coming in and dealing with catastrophic risks. And we see this both in emerging markets and advanced markets. I was quite surprised recently when I was in Japan, and this is a country very exposed to earthquakes. They have a very well-established earthquake insurance program, but there's only a 35% take-up. So I think they're some of the challenges that we see.
Let me move over to you, Guillermo. When we were in Uruguay last week, flying in, we were flying into bad weather because of the tremendous storms that were hitting Brazil. Uruguay is just north of you. How does your experience in Argentina reflect what we've heard from Peter here today?
So last year, we suffered a catastrophic event, which was the opposite of what we experienced, a huge drought. in the Rio de la Plata or River Plate basin area. And that affected revenues for the government and for everyone. And it's happening now every maybe 5 years. And we don't have enough protection for that. Probably 1% of that was protected. And it was the 5th largest catastrophic event in the world with almost no protection. And our economy depends primarily of agriculture. So that's a huge issue. And that is something that we need to cover, we need to work on. We need to work on parametric insurance. We need to, of course, help in that from the Superintendencia de Seguros. And that is also going to make the economic growth and the entire insurance system grow. Also, and together with life insurance, for instance, which is a different thing, but that has to do with the retirement gap. But this is definitely part of the agenda. Because in Argentina, we have a very, insurance penetration is high, I can say that, but primarily because of the mandatory insurance, which is car insurance and workers' compensation insurance that works completely different than in the rest of the world. But there are many other products that we can definitely try to promote.
Let me ask you this, Adam. Your turn. You're on the hot seat now. FloodFlash, you're the private sector tech person here. What is it? What does it do? What's been your experience as you've implemented this in various jurisdictions?
Great. Yeah, thanks, Andrew. So I think it'd probably be useful for the audience for me to give some context on who FloodFlash are, what the product is, and what we're doing. 2016, floods in Louisiana, 144,000 structures damaged or destroyed, $15 billion of damage. Following year, Harvey hits the coast here, $100 billion of damage, 300,000 structures damaged or destroyed. Japan, the following year, 8 million people evacuated as floods hit the southwest. You go through like year by year, continuing, like the floods that are happening every year are only fractionally covered by insurance. Just last year, for example, the floods that hit Northern California had $30 billion of damage. $29 out of every 30 was completely untouched by insurance. Every year globally, that figure is $70 billion is the annual average for global flood losses. Less than 20% is covered by insurance. And I sit here as part of the insurance industry and saying this is the point of insurance, is to protect people when the worst happens. It isn't for I've cracked my cell phone screen or I've put a small dent in the bumper of my car. So we said there's got to be a better way to do this. There's got to be a better way to solve this gap. And this gap is so big, and it gets bigger every year, driven by climate change, driven by population growth, and driven by urbanization. But the only way we're really going to make a dent in that is with a fundamental paradigm shift with how we think about insurance. So we saw this problem growing. At the same time, I was working with my now co-founder and our chief underwriting officer, Ian Bartholomew, at RMS, the risk modeling firm that I'm sure many in the room know. We were working on their capital markets team, which meant we helped to structure and model triggers on catastrophe bonds and insurance-linked securities. Maybe 10-20% of those have these parametric triggers, and that's where we first saw this idea of parametric insurance in action. The one that really inspired what we're doing now was a project that we worked on for the MTA in New York after the subway was hit, after Sandy struck the area in 2012. After that event, their insurers paid them, but afterwards were analogous to what happens to homeowners and small businesses and municipalities all around the world. The insurers said, no thanks. We're not very keen to touch that again. Right? They decided to risk becoming part of the protection gap. So it was actually my co-founder Ian who helped design a product for them to fill that protection gap that they were going to experience, which was a tidal gauge. It's a parametric product based on a tidal gauge at the tip of Manhattan. So if water levels hit a certain level, the subway will get paid $200 million to make their repairs. And we sort of looked at each other and said, hang on, this is amazing. They've used this idea of parametric insurance to go from being nobody wanted to touch them to now being insured. But the New York subway is not the only not the only organization in the world with that problem. We said, firstly, issuing a catastrophe bond, you have to spend several $1 million on investment bankers and lawyers. So only the very biggest entities can really do that. Secondly, it's great if your business or your asset happens to be next to a pre-existing tidal gauge, but for 99.9% of people are not next to a pre-existing tidal gauge. And then, so we realized that if there was a way to solve these two problems, we could bring this product and this idea that we'd seen solve a protection gap here to a much wider market. And the improval of computer power and new IoT networks meant that we could now model and monitor hazard at a fine enough resolution to bring a product like this to the mass market. So FloodFlash kind of miniaturizes that sort of product that worked for the subway in New York. We have an IoT sensor that is attached to the external wall of every client. That sensor tells us the water depth at their site. We have pre-agreed certain depths and certain payout amounts. When the sensor tells us that depth has been hit, we can release the payment straight away. And the value proposition is really in three pieces. Like, one is that the payment is fast. So like a commercial flood claim would typically take months or even years to settle. When a storm hit the UK last year, we settled a full commercial flood claim in 3 hours and 50 minutes. And that's not from water, like claim reported to claim approved, which is how a traditional carrier would measure it. That's the water hitting their building to the cash being in their bank account. And that makes them more resilient, makes them survive. The second thing is the breadth. So, it is the broadest insurance coverage that is possible to buy because there are no excluded items. Once that cash is delivered, the customer can spend it how they like. And the third piece, which is not the one that gets the headlines, but I think is the most, because it is a bit more subtle, but I think it is the most important, particularly for our conversation here, which is that, and it relates to the mathematics behind pricing catastrophe insurance or insurance for rare events, which is parametric insurance removes so many layers of uncertainty for underwriters that they can charge a price that's closer to the true risk price and therefore provide affordable cover even in highest risk areas for the first time. It will touch risk that they previously wouldn't, and that is why it's so powerful in terms of closing the protection gap. So it's launched in the UK about 5 years ago. We're now launched in the US as well. We now have a live policy in Australia as well. But ultimately, every country in the world has a flood underinsurance problem, and that's where we're looking to take this solution. I think it's true to say that almost every dollar of premium that FloodFlash has written is premium that was previously not in the insurance market. It was people having to self-insure to cross their fingers and hope nothing happened.
A couple of follow-up questions to that. One, as sounds to me as if the coverage is binary. You either hit it or you don't. Is that correct?
So each trigger is binary, but each customer will typically have multiple triggers. And so one of the things that we have actually set up in the last year, which we found particularly useful in the US market, is we now have a team that we focus on what's called policy structuring. So we use engineering models to say, when a client comes to us, to say, okay, given that you are a $100 million manufacturing facility with these characteristics, we would expect your losses to hit $5 million at 12 inches, $10 million at 24 inches, and whatever those numbers are. They will typically have a series of these triggers. Getting that structure right and using the flood hazard right at the insured party rather than a tide gauge 5 miles away or a satellite that might pass over twice in 24 hours. Those are the two tools that allow us to really minimize the basis risk on this product, which is that difference between what you might get paid and what you do get paid.
And a second follow-up for you. It sounds as if this product is suited for larger organizations. Have you considered, or would you consider going further down into the market, individual homeowner level, for instance?
Yeah, absolutely. So the range of premiums that FloodFlash writes is very, very wide. So in the UK, we do a lot of smaller stuff. So we do like premiums that are, say, 3 figures. So in the hundreds, like low hundreds of pounds, are our smallest policies. In the US market, the National Flood Insurance Program, which basically subsidizes cover for smaller businesses, kind of mops up that smaller end of the market, which is what kind of forces us to do bigger policies in the US. The limiting factor is really the fixed cost of the sensor. So we charge £100 per year for that in the UK, $200 a year for that in the US. It is certainly the cheapest way to do it, but it will put a limit on the lowest end of premium size. From a technical perspective, there's nothing that stops us doing homeowners. When we were launching the product, we said, in the UK, there's a scheme sort of similar to the NFIP, but it's actually structured a bit more like, I think the CEA is here in California, called Flood Re, that basically helps to protect homeowners. Hence, we started with commercial enterprise in the UK. But yeah, from a technical perspective, we are happy whether the sensor and the policy is attached to a nuclear power plant or a home. Actually, it works. You might change the number of zeros on the premium and the payout, but other than that, the principle is exactly the same.
So that's one example of innovation being used to close the coverage gap. Guillermo, in Argentina, you've had microinsurance regulation since, 2018 roughly?
Yes.
How's that work? What has the effect been there? Have you seen adoption?
Yeah, so we created a framework, yes, in 2018. I was still deputy superintendent back then. Basically, framework for easy to contract coverage, short and clear terms, and rapid response in the event of a claim. So those were the principles in mind. But development is still at an early stage. It has enormous potential. We can all agree on that, but it's only offered by 9 insurers. I have to say that there are 200 insurers in Argentina. We created from the Superintendency working groups. We conducted a survey. We conducted some discussions around things such as distribution channels, because distribution channels are very non-flexible in Argentina. But then it's tough to open it or make it more flexible for someone to sell only microinsurance. And how do you control if they want to say something different or a different type of product? So unfortunately, I'm not seeing much development these days, but still working on it. Yeah.
Peter, from your vantage point, looking out with that broad picture, we've seen 2 ideas of innovation here, with the microinsurance, parametric insurance. What have you seen in terms of adoption as you look across a broader globe?
Yeah, I think similar to what Guillermo just said, what we've seen is a bit mixed. I think you've got to look at it in terms of, how much has been implemented in terms of an enabling regulatory environment versus then the take-up in the market. So in terms of on the regulatory side, most of my engagement and knowledge there comes from the IIS and the related access to insurance initiative. I'll call it A2II. So what we're seeing is there are enabling regulatory environments being created, and A2II actually has a very useful map of these. And I'll give people the website. It's a2ii.org/en/map. And we can see that if we look across that map, there are developing regulations in regions such as Latin America, Africa, and Asia. And also there have been some papers that have been published by the IIS and A2I. The IIS published in 2018 a paper on index-based insurances that set out some of the legal and consumer protection issues. And I think there's still a struggle in that area. And A2II issued in 2020 a a paper on the status of index insurance, and that also showed that in about half the countries that responded to the survey, or a bit over half, that they actually had index insurance being offered. But in terms of our general observations and engagements, talking to supervisors and looking at insurance market development, I think the experience of developing microinsurance has not been as much of a success to date as perhaps many hope. I mean, I'm still optimistic that it's early days in the promotion of these products, but I think the experience of many jurisdictions is that there's been limited interest in setting up dedicated microinsurance entities, and where they are set up, consumers haven't responded as much as we might hope, and some of that's down to a lack of understanding of insurance, and some of it is products might not necessarily meeting their needs, and sometimes it's even trust in insurance companies due to some of the past conduct they've experienced. So on parametric products, again, we've seen some jurisdictions developing or considering developing them, but some of the issues that we've seen is that they're finding it difficult to find reinsurance. Education of consumers is a challenge, making them understand, when claims will be paid, and it's not necessarily directly linked to their personal losses. And there's also the issues of trust again. So, and I think lastly, while in major markets there might be enough data to calibrate the underwriting and pricing, that's more of a challenge in some of the emerging markets.
Let me switch gears for a second, because I've heard a consistent theme: risk awareness, education, that kind of thing. And I'm going to stick with you for a second, Peter. How are you seeing education viewed globally? How's it being handled?
I think education of consumers is an inherently local issue, and each jurisdiction will have its own issues. I think A2II has been doing some good work in this area, but I think we talk about education and awareness and knowledge being for consumers, but I think with this audience here, we also need to think about the understanding of insurance supervisors. I think insurance supervisors need to understand the different risks, particularly the different market conduct risks that come with some of these more innovative products, and I think that's something that we in this room probably can address more at a global level.
Let me turn to you, Adam. Tech proponents always say it's a great democratizer. Going to increase access, you're going to reach more people. From your point of view, you've got a product. How do you use that to educate people, either about the product in general, about the risks they face, or about parametric insurance?
Yeah, I think the product becomes a great tool to do that. But yeah, the education gap is a big part of the problems that we face. Like, FloodFlash doesn't exist to, as we talked about earlier, to provide another solution for people who already have a solution. It's there to solve a different problem. But as a solution, it is different to generally anything that our customers have seen before, particularly as you kind of at the smaller end of our customers. Those at the larger end probably might have professional risk managers, for example, that are much more familiar with this. But small businesses, and as we get down into homeowners, that's certainly not the case. But insurance is a product that is built on trust. I have to trust that I'm going to put my livelihood, my family's financial future potentially in this new weird product that I've never seen work before. One of the most useful sort of step changes that we have had in this sort of journey of bringing a new category of product to the world is after we first paid claims. I remember when we launched in the UK, and the business was just a few of us at that time, and we'd go around and we'd speak to insurance agents, and they'd say to us, "Guys, this is an amazing idea. have you ever actually paid anybody? And we'd have to say, no, but I promise we will when it happens. Because, as a catastrophe product, most of the time we're not paying claims. It's just when the day happens, and then all the claims come at the same time. And that day was February 8th, 2020, which is my co-founder's birthday, which is one of the reasons that I remember it. But it's obviously just pre-COVID, and a storm called Kiara hit the UK. And that was when everything worked, and everything fell into place. Storm happened, and it was a destructive event, and it was horrible for the people who went through it. But we had these wonderful stories come out of it, of these businesses and these livelihoods that had been saved, that if they hadn't had FloodFlash, that wouldn't be the case. We've got one guy, you can find this video on the FloodFlash website, who, a gruff Yorkshireman who runs a small business, an egg packaging factory, who, I suspect has never smiled in his life, like on camera, swearing on his child's life that taking out a FloodFlash policy was the best thing he's done for 5 years. And once that happened, that then became a case study that we could take to other insurance agents, that they could pass on to their customers and say that, that thing that you say is too good to be true. No, it does how it works. This is how it works. You will get paid within days. Your livelihood will be saved as a result. So that's, it doesn't happen overnight. I think we've mentioned cyber a couple of times. I think it's a really interesting analogy to some of these catastrophic perils and the catastrophe protection gap, where you have this, in both cases, you've had a big protection gap that's been kind of existed because it's very difficult to price and therefore provide efficient insurance for. You have to educate not just the buyers of the policy, but also the sellers of the policy, with in agents in this case. You have to educate them sometimes not just on the solution, but sometimes also on the problem that they face, which can be quite alien and quite abstract. And this with cyber, that didn't happen overnight. That took decade or so. But now it's like cyber coverage is ubiquitous. And I expect that parametric NatCat coverage will go the same way.
Guillermo, let me ask you, because we had this conversation in Uruguay. I just want to continue that conversation. There was a UN report that said 28% of the people in Argentina do not have access to financial services. What do you see as your role? And I'm going to broadly use education, define it as you will.
Yeah. So first of all, I would like to say something about education, because that's also a word that I keep hearing all these insurance forums. And I have a personal view about education. We have an inclination, right, to be willing to run an education campaign, and we talk about education as if education one day is going to come from Mars or from somewhere else and be here and would say, "Hey, hello, education," and that's not the case. Of course, there are arguments in favor of education, which are strong. So we tend to think that people have little or no appreciation for the value of insurance, of what insurance creates for them, nor there's any understanding of the risk they are running. So the response is educate them, to educate the public. But I would think, well, maybe perhaps if the public had a better understanding, the protection gap would be reduced. Now, I learned working as a consultant, not in the insurance sector, but in the financial sector, that there are at least 3 problems with this idea of education, and I would like to explain this. First, educations can take a long time to meaningfully educate the audiences. What I'm seeing in your case, for instance, is not that you educated people, maybe a little bit, but you had a great idea that went out there and was easy to sell and to marketing and to commercialize. So education campaigns, they take a long time. Second, education campaigns are passive. So the most we gain is better informed people, but little to achieve objectives. That's at least what I think. And third, that education campaigns are blinded by principle. So this means that educating others to see the issue the right way before trying to make them adapt our principles is unlikely to be effective. So the way I see it is, there's a problem, we may create some awareness, some knowledge, some understanding, maybe reflection, but in the end, by educating, I think that we will end up creating confusion. So in other words, education campaigns are broad, but driving people to indecision, and we want people to take action. So that will be the difference between how education goes and what we want. We want people to take action, to see the problems. Now, with respect to the 28%, I have another answer here for you, somewhere here in my iPad. In Argentina, we have a well-developed banking infrastructure. Mobile banking apps and digital payment platforms have grown rapidly. There are government social welfare programs that involve the banking system or the creation of banking accounts. So there is penetration, and there is the Argentine population. I have to say that has access to all these financial products. The problem is informality, and informality created by macroeconomic issues that the current government is trying to solve. So,
let me switch. I know we're about 2/3 of the way through, and I'm looking at the questions. By the way, if you have questions, please feel free to submit them through Slido. I'm going to turn to you, Peter, because when we had that initial question, the two gaps that were identified, there was the NatCat gap, but there was also a retirement gap. As I look at our first question here, or the currently top-ranked question, would more legal mandates for coverage be a good way to close some gaps, perhaps in the retirement security space? What do you see for the retirement gap, and what role do you think either government or regulators have in trying to help close that gap? What can we do? Do mandates work?
Well, let me talk about the problem a little bit first. So in many advanced countries, we've got an issue of declining birth rates and therefore ageing populations, etc. So we've basically got more people in retirement needing support, potentially from a smaller working population. In some countries, that's mitigated a little bit by immigration, but that's a broad trend in advanced countries. And just as that's happening, of course, there are advances in medical technology and also just living standards that mean that broadly we're seeing people's life expectancy extended. So there's this sort of inherent requirement to support people, more people for longer in retirement. And what we've seen happening at the same time, of course, is you've had the low interest rate environment up until the last couple of years, along with advances in economic and actuarial modelling, which has sort of brought to the fore that offering guaranteed insurance products or defined benefit pensions is a very expensive thing. And so we've seen a retreat of those guaranteed products, meaning that essentially it's left up to household balance sheets to manage this retirement income requirement. So I think that there's been some developments in this area. I know how the PE-influenced life insurers are saying that they've got a solution where they can derive a bit more of an illiquidity premium, making things like annuity products more affordable. But of course, we've got to look at that with our risk hat on and say, well, that's transforming the risk profile of the life insurance sector, and of course we haven't seen how these private credit products are going to actually operate in a significant economic downturn in their current size and structure. So, turning to the mandate issue, I mean that's not something that as an insurance supervision expert that I want to talk about too much. But I note that in Australia, where I'm from, there's a compulsory superannuation system, which has actually delivered us the fourth biggest pension pot in the world, and we're far from being the fourth biggest economy. So.
Let me ask, I'm just looking over here for a quick question. I'm going to direct it to Adam. And it says, apart from the USA and the UK, and I think you'd mentioned Australia as well, can you cover other countries in the world?
The short answer is yes. The slightly longer answer is that at the moment it depends on the client's premium budget. Ultimately, that will come down everywhere. As I mentioned earlier, it's the floods in the Middle East a couple of weeks ago were a good reminder. Almost every single country in the world has a flood underinsurance problem. So we don't have any minimum premiums in the US or the UK. In Germany, Japan, Canada, then we have a minimum premium of $250,000. The rest of the world, it's $500,000. And the reason for that is that we are just not internally set up yet to automate the process. So our underwriting team, our catastrophe analysts have to spend a lot of time working on those quotes, doing the modelling, and making sure that it's all going to work for everybody. So at the moment, that realistically, that does mean that it is limited to larger entities in most of the world at this point. As we enter those countries, then we automate things, and those minimum premiums will fall away.
What about governments, for instance, as Peter mentioned, with the Caribbean, you look at countries?
Yeah, absolutely. So governments, both at the municipal level, at the national level, governments become the de facto insurer of last resort, picking up the tab for so many of these events anyway. Parametric insurance can be such a powerful risk transfer tool for them. And yes, absolutely, that is a category of customer that we will willingly work with.
Yeah, we've heard an awful lot this week or these past couple of days on public-private partnerships. Guillermo, let me ask you on your side, do you see public-private partnerships in Argentina as being helpful in addressing climate risk, for example?
So at this time, there's no development of any public partnership. We tried to do that in the DAS administration, and didn't go well. But that's because of the macroeconomic issues. It's definitely a good tool. It's the right tool, and we're working to promote those type of things. But nowadays, we're thinking about trying to solve other issues. So it's not the right time to develop that, yeah, unfortunately.
Insurance regulator, insurance participant, IMF. Let me ask each of you, what do you think the role of insurance supervisors, insurance regulators should be? We've heard all about these exciting new products, but what should we be doing? And Guillermo, I'm just going to stick with you if you can start off here. And if you can, just as we go along, we've all got different market conditions. How does it work? What do you think would work for you in the Latin American and the Argentinian context?
So I think that the role of the regulator is crucial, right, for development, but also, of course, the role of the private sector. The mission, our mission in developed countries, regulators have a different role because their markets are more developed. That's how it is. In developing countries, we need to bring all the people to the tables and we need to discuss, we need to promote issues, and we need to be more actively involved in, for instance, investments, as I said before. We need to work on trying to bring investments into the productive financing, bring investments to capital markets, and we need to create new products. As I said, we have very few products, those mandatory products only. I'm currently trying to be more flexible. I just issued a new regulation regarding depository system for new products. I'm willing to have a stronger market, and a market selling more, but also selling more products. So not only the mandatory products, as I said before. So there's a lot that has to be done. In the past, regulators in Argentina were more like not willing to work together with the private sector. And we are we do have this policy of open doors, right? So where we meet with all the participants, and we are constantly trying to bring them to the superintendency to think about new regulation and to see how do we altogether eliminate red tape and make regulation more efficient. This day, my idea in the superintendency is to regulate less, to have a better supervision, because it's insane the amount of information that we request to companies, and it's information that we do not process it. So why are we asking for information? Why is it that we are asking for information and there's an overlap between the superintendency and other regulators? If there's no need to make all these requests, and eventually to supervise better, to rebuild supervision in Argentina. So because we are only asking for information that is not going to be processed, then we are not even supervising, and that's a huge problem. So better supervision is to have, for me, is to have less regulation these days in Argentina. Yeah.
Now, Adam, we just heard Guillermo's vision: more efficient regulation, less regulation, more cooperation with all stakeholders, and the idea that we broaden the market, we add new products, and almost by definition doing that, you add access to more products. You're on the other side. You're in industry. You have to come to us with your new ideas. What would you like to see from regulators?
Yeah, so I think for me it's making sure we get that balance right between like protection for people, but making sure the barriers are not up to prevent innovation happening. These protection gaps exist with the way we're operating at the moment. Unless we pull down more barriers, we're not closing any protection gaps. That seems like a given to me. A couple of examples might be just from my own personal experience are so with parametric insurance, one of the things in the US market is that to make sure this counts as an insurance product, not like a derivative, we have to have basically a clause in there that basically says the customer effectively can't profit from it. Now, that seems reasonable in the principles of insurance, but at the same time, that then becomes a barrier because you have the customer saying, hang on, if the policy pays it less than I'm expecting, I have to take all the downside, but I have to give up all the upside. That doesn't seem a very fair position for me to be in. And particularly as you get into larger customers, they are they're sophisticated buyers, and if those barriers are reduced, it means we can get the product into hands of more people and reduce that protection gap. And I think there's one. Interestingly, we don't have that same clause in the UK. And one of the reasons for that is that when we launched the product, we went through the Financial Conduct Authority's regulatory sandbox, which is a program they set up sort of recognizing this natural tension between regulation and and innovation, and so let's get that conversation going. And we said, okay, well, this is a parametric product, but we're not using like some sort of satellite from space. We're not we're not using a gauge from 5 miles away. We're not using like a rainfall index. We're actually measuring the flood right at that client site. And actually, the FCA's guidance was, you know what, we're so happy that you've removed so much basis risk, and there is going to be such a tight coupling between there going to be a flood there and loss there, that we don't have the same requirement. So that kind of flexibility to pull down barriers is a great example of kind of what we need to close these gaps.
Peter, flexibility, efficiency, innovation, new products, new systems, new ideas. What's the role of an organization like the IMF in promoting that, or do you see a role for the IMF there?
I don't necessarily see a role for the IMF, because you have to look at our mandate is about financial stability. Of course, this is an issue that relates to financial stability, but I think there are a number of other global organisations that their mandate has a better fit for what you're talking about in terms of promoting the development of these products. And I'd shout out to our sister institution, the World Bank, which actually has a development mandate and therefore is much more involved in developing and providing advice, technical assistance on insurance solutions to deal with the lack of protection for some of these risks. And of course, there are regional development banks as well that are also engaged in this kind of development. So I think there are global organisations and regional organisations that have a mandate that is very much aligned with being able to help with the development of these more innovative solutions.
Let me ask you, Guillermo, as we look to the future, say in Argentina, you've got let's say they give you all the resources you need, you have all the authority that you need to move ahead to close the gaps. We've discussed some ideas here. What else would you like to do?
Well, thank you so much. Now I will have to say something regarding Latin America, about the reason, which is Latin America has represents 2% of the global insurance industry, but 6% of the GDP, and it's 8% of the population. So the growth opportunity is there, the potential. So Adam, you're of course invited to come and join us and have a conversation, and let's see what we can do together to promote. So we're seeing here an example of regulator and the private sector trying to achieve something. Yes, from my perspective, there's growth potential, and there's an opportunity from the insurance sector to bring something to the general public. And also I would like to say that as regulators, and the industry needs to go out, not only to have meetings among us with the private sector, regarding the insurance issues or the insurance framework, but we need to go out and to talk to the financial sector. We need to go out and talk to the real economy. That's the example was what we tried to do, or I think what we achieved in 2018 when we organized the first G20 event of the entire insurance sector, where we could explain to the financial ministers what we were doing, what we do, and what's so important about the importance of the insurance. So we need to keep doing this type of meetings, but also try to go outside, think outside the box, and also show the rest of the world and the rest of the policymakers what insurance can do for them and for the citizens.
Yeah, just to editorialize for a minute, I couldn't agree with you more. We know various international organizations tend to know banking, but not insurance.
Correct.
And that G20, that was a great program. And next year, G20 is in South Africa. I'm not sure if Jonathan's still here, but let's put pressure on them so we have another event there.
Correct. We had the first one in Argentina 2018. Then it happened, I think, in Japan in 2019, and then COVID. So, but this year the G20 is taking place in Brazil. Next year in South Africa. So that's why we're making a lot of pressure to Jonathan that maybe is still somewhere there. And in 2026 here in the U.S. So that's where I'm.
We're
I'm
in
putting
DC.
pressure on you.
We will do what we can.
Yeah.
I know we're almost out of time here. Let me just ask you a couple of last questions. And Adam, the question first. Parametric insurance. Okay, you've shown one option. What else can it do? Are there other perils we can use it to insure against? What do you see as the future of parametric insurance?
Yeah, absolutely. So ultimately, I almost see like it can fill two gaps. One is like an underwriting, a gap where you have insurers are exposing themselves to these very, very large risks, these very correlated risks, and want to be able to access those in a more managed way. That's where, like, I think, particularly in developed nations, parametric insurance can be so powerful, and like ultimately for any like rare event, the same principles that hold true for FloodFlash will also hold true for other perils, whether that be quake or wildfire, severe convective storm. They remove uncertainty, allow insurers to cover that risk. The problem they're solving there is an underwriting one. The other area, almost totally at the opposite end of the spectrum, which we touched on a couple of times, is micro-insurance, where the problem it solves is a different one. It's not about the uncertainty in pricing these rare events. It's about the cost of the loss adjustment process, which is a fixed cost which can be cut out. The limitation there is making sure, of course, that the index that you're using does still, even if your budget there isn't going to allow you to pick up additional data sources, is still going to be like correlate tightly enough with the loss that the people might experience to make sure it's still a really effective risk management tool for them.
Peter, you get the last word here. We've covered a lot in terms of the number of gaps that we've seen. Are there gaps that you see developing or that we're not paying attention to that you would suggest we put more focus on?
I think potentially one, and sometimes I think we talk about the retirement income gap without sort of separating out that there is actually a healthcare gap that either is part of that or is a separate add-on to that. So, we're talking about the lengthening of life expectancy, which means that people will need healthcare for longer, and with advances in medicine, that comes with costs. So that's something that I think is an issue that's very much related to the retirement income gap, but we should pay perhaps separate attention to that.
Thank you. Our panelists today, Peter Windsor is a senior financial sector expert with the International Monetary Fund. Adam Rimmer is the CEO and co-founder of FloodFlash, and Dr. Guillermo Pedro Plate is superintendent of the Superintendencia de Seguros de la Nación, Argentina.
Awesome. Thank you so much.
Thank you all. Appreciate it.
Thanks, Andy. Thanks.